Guys, I'm back, and so are you, and so is a nice, happy Independence Day to all of us, guys. What do you seek independence from? I was just doing a morning batch this morning for CA final, and I was just talking to them about independence, and most of them felt that they want independence financially. They want to be independent, and I think that's a great thing because the moment you're financially independent, you don't have to answer to anyone. All those aspirations, all those things that you see and you want to buy, you could buy. Of course, very materialistically, but what I want to see you guys is I want to see you guys independent from this degree. I want you to see you clearing this degree cleared off, and I want you to see as chartered accountants. Honestly, it'll be so good to someday bump into you and you introducing me as a chartered accountant. So, looking forward to those days and working towards those days every day. I hope you are also working because whenever I come to class, I try to do that. I try to bring in my 500%, guys. So keep yourself motivated. Motivation is something that is always good to have. Yes. So with that, guys, let's motivate. Also, a little bit more motivation is required when everyone else is chilling on an Independence Day holiday, but you are here. Yes. After my morning class, I met someone, a very old friend of mine, for coffee. And I told her that I have a class in the afternoon. And she said, "Why are you troubling students in the afternoon?" So I said, this is the way it goes. So every day that you put in the work, I'm sure someone out there is watching and it will be rewarded very soon. So fingers crossed for that. Today's session, guys, is on the screen income from other sources, but thankfully, this is in our pocket already. Work from cafe. Oh yes, Instagram. Perfect. So guys, we are done with income from other sources already. So let's see. Let's take a stock of what all we've done already. So we've done a chapter called Introduction. We've also pocketed a chapter called House Property, Income from House Property. We also understood a lot of incomes, including agriculture income, which were exempt. We also did a chapter called Residential Status and Scope of Income. And we also did a chapter which is called income from other sources. And of course, along with that, there's our friend who's always walking along with us. It's called rates of tax. We have finished quite a bit on rates of tax as well. So this is the journey that we've completed. Let's see the journey that we need to cover today. In this session today, guys, we are looking to complete. We've already started clubbing of income. We are going to take that pet dog or pet cat and take it back to the real owner in a chapter called clubbing of income. Then we will do a chapter called PGBP. It's a slightly big chapter, but it's a very interesting chapter. And then we will look at a chapter called set off and carry forward of losses. So I'm doing a little mix, guys, of smaller chapters and then like a head of income and then another chapter and then back to head of income. So this mix always helps. A big mistake that a lot of CA inter students do is they focus on the five heads of income a lot. And that's a problem, guys, because just like how a head of income is important, equally important is residential status. Just like how PGBP is important, even more important is TDS chapter. So you got to spread your attention to everyone, guys. So that's what we are going to do in today's session as well. For people who are new, this is the Telegram link that I'm putting here. Just one second. This is a Telegram link that you could join and to build the community. Also, if I want to share anything later, I could do that. Also, I will send across the Google Drive link. I haven't yet uploaded the handwritten notes there, but I will upload it. It's ready. It's in a folder. I just need to upload that. Anything else you need from me, I will always help you to the max I can. What are we going to cover in these sessions? Of course, first we will do concept clarity. Then we will look at the ICAI material, especially all the illustrations and the sums. And then we will go on to exam questions. So that's the trajectory with which we will finish each of these chapters. So guys, that's how it's going to be. Today's afternoon and evening is going to be spent getting really good at these chapters. Let's start, guys. Here we go. Just keeping a nice white theme. Perfect. Guys, we are looking at a chapter called clubbing of income, and the easiest way to understand clubbing of income is from the government's perspective. It is your income, this is you, and this is your income. But you don't want to be taxed at a higher rate. So you transfer your pet cat or your pet dog to someone else. This is any other person. and the government says, listen, we don't mind the asset going to some other person, but the income should come back to you. So this income will come back to you, and this coming back to you, the income is called clubbing of income. So do we club assets? No, we don't club assets, we only club income, and this chapter is called clubbing of income. Is it important? Yes. What part of it is important? I will talk about it right away, guys. First, there is a part called section 60. Then there is section 61, 62 and 63. This is a not so important part. Why am I saying this? Because this applies to every person, not just to individuals. In this section 60, you are transferring income without transferring asset. The government understands your intention and they make it clubbing happen. They club it back, they get the pet back to you. In this second case, you were transferring income, you were also transferring asset, but it was a revocable transfer. That means it was a fake transfer, guys. Let's replace revocable transfer with fake transfer. The revocable transfer is when you have the right to revoke it back or to claim it back, or you have the right to enjoy certain part of the income or the full income. And then finally, when this also, guys, this income and asset clubbing will apply here also. Finally, clubbing will not apply in this case because you transferred the income and you transferred the asset, which is irrevocable transfer. This is honestly you giving your iPhone to some friend away and saying, I don't want it back. Section 63 only talks about what is revocable transfer. Revocable transfer is when you have the power to revoke it back. You might not exercise the power, but you have the power. And second is when you have the power to enjoy either the full or the part of the income, then the entire transfer will be called revocable transfer. Guys, while this was great, the main thing was this section 64. For an individual, any income manipulation with the spouse, the government doesn't like because clubbing can apply. Any income manipulation with the son's wife, the government doesn't like. Any income manipulation with a minor child, the government doesn't like. And any income manipulation with the HUF, the government doesn't like. But guys, besides that, can you plan your income tax with some random stranger? Let's say you have a favorite best friend of yours. Can you transfer and manipulate income? Yes. Let's say you like some faculty on Unacademy. He's the best faculty you ever met, and you transfer all your property to manipulate. Can you do that? Yes. Can you do that with your parents? Can you do that with a stranger? Yes. The government has no problem, guys, because people don't do that. If you don't trust me, today, if you are 18, and I'm sure most of you guys are 18 already, if you go to your parents and tell them that, listen, you know, dad, mom, you get taxed a lot. Why don't you do one thing? Why don't you transfer all the shares, all the gold, etc. in my name, and I will enjoy 2.5, 3 lakh rupees of income without paying taxes? They will not do that. So the government feels that, you know, these are the only possible relationships which are abused for tax purposes, and these are the only 4 relationships which are taxed under clubbing of income. So guys, you like someone and you get engaged to that person. Can you manipulate income with that person you got engaged to? Why not? There is no clubbing of income there. What about your son's wife? No. What about your spouse? No. But your fiance, guys, it doesn't cover fiance, it only covers spouse and son's wife. What about a major child? There is no problem with major child. Minor child, income gets clubbed. And what about an HUF? Yes, it gets clubbed. So these are the 4 relationships that we need to look at. We're going to look at one by one. First, the ones that we've already completed. There is a section called section 64 1A, and this is for your A1 minor children. So every income of the minor child, is it clubbed? Yes, every income of minor child is clubbed. And it is clubbed in whose hands? It is clubbed in that parent's hand who has higher income before such clubbing. So guys, will you do clubbing first or will you do calculation first? You will do all the calculation of the husband and the wife. And whoever's income is higher, then you will do this clubbing. So this is the last thing that you will do. Yes. While you club, even while clubbing, you will compute the income first of the minor child and then you will club. While you club, you will give a deduction of 1500 rupees. That's not a deduction, it's an exemption under section 1032. Next, there are 2 exceptions. SIM income will never be clubbed, but I'm writing only one. Why only one? Only the first level will not be clubbed, guys. second, third, subsequent levels, will it be clubbed? Yes, it will be clubbed. Accretion of income, because the minor child does not have a mind of his own. Income of disabled minor child, will that be clubbed? Disabled person's income will also not be clubbed, and here all incomes will not be clubbed. So here there are two exceptions where clubbing will not happen, but that does not mean, guys, they're not going to be taxed. They are going to be taxed. Only thing is clubbing will not apply in these cases. Perfect. That is section 64 1A. We are looking at more questions also, but right now I'm just going to let this be. One second. This is clubbing of income. Yes. So 60, 61, 62, 63 we are done. 64 1A we are done. Exemption, minor child, yes, and minor married daughter. Okay, sim income. Okay, Akshat, sim basically means skill, intelligence, and manual work. Any income from skill, any income from intelligence or manual work, that income will not be clubbed. Only the first level. I hope that is clear. And last, guys, a minor married daughter. A minor married daughter. Yes, guys, a minor married daughter. No problem. Now you know about the shortcut, Akshat. So a minor married daughter, guys, will be treated as the same way as any minor child. So will the income be clubbed of a minor child? Yes. Will the income be clubbed of a minor married daughter? In whose hands? Husband's hands? No. Parents' hands. I'll give you one situation where ICI will try to, tease you or confuse you. Here we go, guys. This is the grandfather, and he has given a house to the grandson who is just 16 years old. Now, this grandson has income from that house property. Whose hands will it be clubbed in? In the grandfather's hand or in the parent's hand, guys? Income will always be clubbed in the hands of the parents. This is how ICI will confuse you, guys. Here we go. Every income of minor child, whether it comes from grandfather or great grandfather or neighbor's grandfather or anyone, income of minor child will always. But guys, didn't I say section 60? But guys, whenever there is a specific section like 64 1A, that takes over the random sections. Section 60 applies to everyone. If it's a minor child, only look at parent, no one else. I hope Venkat, that is clear now. So please tell me here, income will be clubbed in whose hands? Income will be clubbed in the parent's hand. Maybe the mother, maybe the father, whoever has higher income. Guys, this is section 64 1A. This was done and dusted. Next was section 64 2. Again, you have a lot of incomes, but your HUF doesn't have a lot of incomes. So can you transfer the asset to the HUF? Yes. And now the HUF will earn the income. And collectively, you fooled the government. The government will not like this. So they say that, listen, if you transfer the asset to the HUF, we will bring back the income in your hands. This is a member of the HUF. Clubbing will apply. Yes, clubbing will apply. But guys, what if the HUF gets partitioned and this asset goes to one of the members? Let's say the debentures go to one of the members. Then will clubbing again apply? Yes, still clubbing will apply. So whether it's in the hands of the HUF or on partition in the hands of the members, clubbing will apply. Guys, please remember, whoever's dog it is, it will still go back to the real owner. Alright. With that, guys, we come to one of the most important relationships, which is you and your spouse. Guys, this is Mr. X, and he basically is trying to put some money into his spouse's income. So what he does is, spouse, let's say right now has zero income. So what he does is, he's a partner in a partnership firm, and he has 10% or let's say 9% shareholding in this partnership firm. But his relatives, you know what are relatives, guys? The relatives also have 20% share in this partnership firm. So 9 and 20, the person, that is Mr. X, has basically, with his relatives, does he own substantial interest in the firm? Yes, he holds substantial interest in the firm along with the relatives, plus the relatives. Now guys, he can influence the partnership firm with 29%. You can always influence the partnership firm. You tell the partnership firm that partnership firm pay some random amount to the spouse. Even though it's not linked to her qualification, please pay 2,50,000 to the spouse. You can call it whatever you want, but it is not linked to the spouse's qualification. So the spouse earns income. and here this firm gets an expense, but we are not looking at the expense right now. So this spouse gets income and the government does not get any tax on this 2,50,000. So the government says, listen, we know what you're trying to do. You are trying to influence the firm to pay to your spouse, which is not linked. If it was linked, we have no problem. She will pay the tax or she will not pay the tax. We don't have any problem if it's linked. But because it is not linked, this income will come back in your hands and will be taxed in your hands. This is called clubbing of income. 64(1) is the section. Guys, how do you remember? Because ideally 64(1) is basically for two people, but how you remember? Spouse, one spouse, so section 64(1). So this is a shortcut, guys. Here I'm changing some things. You tell me, will clubbing apply? What if this is linked to the spouse's education or professional qualification? Then will clubbing apply? No, clubbing will not apply in that case. Guys, I want replies. What if you hold with your relatives, your relatives only hold 10% and with your relatives you hold 19% in the partnership firm? Will clubbing of income apply? No, clubbing will not apply. Guys, will it be taxable? Yes. See, government will not forego the tax. It will be taxable, but clubbing will not apply. So for clubbing, what all should be there? For clubbing, first, you should be owning with your relatives more than 20 or more percent in that entity. It could be any entity. Yes, I've taken a partnership firm. It could be any entity. And that entity should be paying salary, remuneration, income, commission, etc. to the spouse, which is not linked to her education or professional qualification. Now, guys, I'm giving you a very, very different situation, but it's the same concept. Let's say, guys, this is you and your relatives, and together you hold substantial interest in an entity. Let's say you hold 30% in an entity along with your relatives, and this is a partnership firm. And this partnership firm is paying you also and your spouse, it's paying both of them salary. 5 lakh rupees and 6 lakh rupees. So now, and it's not linked to education or professional qualifications. So will now clubbing apply? Yes. But in whose hands will it apply? Guys, it will apply as the government thinks, guys. So now this is you and your spouse. Are you all relatives? Yes. And you all both get income. Let's say this person's income, let me increase this to 50 lakhs. And this is only 6 lakhs. So will it apply in X's income or spouse's income? Will it be clubbing will apply, but it will apply in that person's income who has higher income before such clubbing. This is very logical. So I'll just repeat this. What is this? Guys, the same situations. You are X, you are spouse, you all both have substantial interest in a partnership firm, and both of you are getting salary remuneration, which is not linked to your qualification or experience. Then in that case, clubbing will apply. Yes, for both it will apply. Yes, but it will be clubbed in that person's income whose income before such clubbing is more. All right, this is section 64(1). I'm giving you the next situation. Again, guys, this is you and you have some debentures and you don't want these debentures. So you transfer these debentures to your spouse. Now, the spouse earns the interest income of 2,50,000, but because she has no other income, she will not land up paying any tax. So they have fooled the government collectively. Guys, please tell me whose cat is this, guys? Whose debentures are these? This is X's debentures, so will it go back? Yes, clubbing will apply. This is the same thing that we discussed in house property, but there it was house property. Here it is debentures. Same concept, guys. But are there some exceptions? Yes, guys, you already know the exceptions. Please tell me the exceptions. If there is a separation, then clubbing will not apply. And if the spouse has paid adequate consideration, then clubbing will not apply. Guys, what if the spouse has paid only half the consideration? Let's say this debenture are worth 10 lakhs and she has paid only 5 lakh. Then half clubbing will apply, proportionate. I repeat, guys, what if the spouse has paid 50% of the debenture amount? Then 5 lakh, then half of it will be clubbed. I'm not putting the numbers, but I'm just saying if 50% she has paid, then 50% clubbing will apply, 50% will taxed in her hands only. All right. And the last, guys, is very simple. You don't want to transfer directly to your spouse, because if you transfer directly to your spouse, the government catches you. So you transfer it to a third party, and the third party transfers it to your spouse. The government says, listen, you're fooling me. I told you not to go to that place, you're going indirectly. So in this case also, will clubbing apply, guys? Yes, in this case also clubbing will apply, unless the spouse has paid adequate consideration. Same concept, yes, same concept. Guys, this same thing I can also do in relation with my son's wife. So if I transfer some asset in my son's wife, why only son's wife? Why not daughter's husband? Because traditionally, guys, women in India were having lesser income. This should change very soon, but till now it is this. In this case also, of course, separation cannot be, guys. You cannot separate from your son's wife. So separation cannot be the case. But adequate consideration, and here also adequate consideration, are the exceptions. So please tell me, guys, transfer to the spouse and transfer to the son's wife, is it the same, almost the same? Yes, except of course separation, you cannot separate from your son's wife. I am giving you a situation, guys, which is very important. Watch out. This is you, and you transferred the asset when she was your fiance. Guys, is she your spouse yet? No. You transferred the asset when she was your fiance. And guys, this, let's put a date here. This is today's date, 15th August. She was your fiance. And guys, now you guys are married. So let's say next year, let's say 20th December next year, you guys get married. Now guys, will clubbing apply? No, because guys, the relationship should exist at the time of transfer as well as the time of earning the income, both the times. So guys, can we plan it? Can we plan our taxes like this? Yes, it's a very good thing. But remember, guys, if you transfer the asset and for some reason she says, I don't want to get married to you, what if she gives you the ring back? Guys, if she gives you the ring back, then this will go away. Venkat is saying, what about section 60? In section 60 also it will not apply because you've transferred irrevocably this asset to your fiance. All right. Yes, so I hope that is okay, guys. If it's an irrevocable transfer anyways, it will not apply. But remember, guys, there's a risk of this, because what if you don't land up together? Same risk, guys, exists here as well. So this is son's wife and this is fiance. All the relationships have been covered, guys. I've covered spouse, I've covered son's wife, I've covered minor child, I've covered HUF. But now, guys, look at India's creativity. In this next example, you will see India's creativity. See how creative we are. This is person A and this is wife of A. This is person B and this is wife of B. Guys, what they do is they meet up for lunch and dinner and they plan the taxes. Let's assume right now, guys, I'm not making any feminist remark or a chauvinist remark, but just assuming, guys, that A and B have a lot of incomes, but their wife doesn't have so much income. So what they are trying to do, they are going to plan it in such a way that A makes an FD, irrevocable FD, in the wife's name of B. This is a fixed deposit. Is it an irrevocable transfer? Yes. Venkat, please tell me, in irrevocable transfer, will the income be clubbed? No, income will not be clubbed. So the wife has earned the income. Yes. So have they fooled the government? Yes, they fooled the government. And on the other hand, B will also transfer some debentures, let's say 10 lakh FD and 10 lakh debentures, to the wife of A. As in this case also, in both the cases, there is absolutely no tax or very little tax, and you fooled the government. Please tell me, I'm giving you a situation, guys. Will section 60 apply? No, because irrevocable transfer. 61, no. 62 may apply, but then you can't do clubbing in this case. And guys, will 64 apply? Is it spouse or son's wife or HUF or minor child? No. Then in this case, you fooled the government, but the government says, listen, if we get to know that you've done such kind of cross transfers, if we get to know that you've done such kind of cross transfers, then in this case, these incomes, let's say this person's income from the debentures was 1 lakh and this person's income from the FD was 90,000. Whatever is the common amount, guys, 1,90,000, what is the common amount? 90,000. That will be clubbed in their respective husbands or relationships name. So this will be clubbed here and this will be clubbed here. It will not go back to the original owner, it will go back to your relationship. So clubbing will apply. Yes, in this case, clubbing will apply. So this is the concept of clubbing, guys. This is the chapter of clubbing. It's over, done and dusted. I'm giving you an example. You tell me, guys, how much clubbing should apply. This is the husband. He's transferred to his wife debentures whose face value is 2 lakh rupees. The interest on these debentures is 14%. The market value of these debentures is 1 lakh 80 and the wife has paid 90,000 rupees for it. Step by step, please tell me, is this situation under section 64(1)? Yes. Now please tell me, guys, has the wife paid adequate consideration? First, let me put this, guys. What if the wife pays 1 lakh 80? Has she paid adequate consideration? Will clubbing apply? No. Will it be taxable? Yes. Whose hands it will be taxable? In the wife's hands. Full amount? Yes, full amount. Guys, what if she only pays 90,000? Then, guys, how much has she paid? Only 50%. Then she'll get to eat only 50% of the cake. 50% of the cake will go back. Now, what is the cake? What is the amount, guys? The interest will be calculated on the face value. So the interest is 28,000. On 28,000, 14,000 taxable here, 14,000 taxable here. I hope this is understood. Perfect. All right, guys, opening up now. Let's see if there's any other point that is left. Yes, one more point is left. How could I forget that? Guys, please tell me, this is you and this is your best friend and you started a business together and you gave your best friend 5 lakh rupees. He also put 5 lakh rupees and you all started a business. 5 lakh plus 5 lakh with 10 lakh rupees. You all started an event management company. And this year you made a profit of 1 lakh rupees. Please tell me, out of 1 lakh, how much will belong to X? 50%, that is 50,000. So do you understand this partnership firm system? Yes, this is a very simple partnership firm system. But now, guys, instead of your best friend, let's say this is your spouse. So this is your spouse and you gave either 5 lakh rupees to your spouse, or you give 5 lakh worth of gold to that spouse, or you give 5 lakh worth of debentures to the spouse, or you give 5 lakh worth of gold or land to your spouse. It can be 5 lakh worth of any asset, guys. Even money is an asset. Please tell me, guys, is money also an asset? Yes, money is also an asset. Guys, I'm not getting the replies that I want. So please tell me, is money also an asset? Yes. Is gold an asset? Is debenture an asset? Is land an asset? You can give anything. So let's take, you've given gold. And your spouse with the 5 lakh rupee gold, plus your spouse also put 5 lakh rupees of gold. Your spouse started a business and made a profit of 1 lakh rupees. How much of that will come back to you, guys? How much of that will clubbed in your hands? 50% of that will be clubbed back in your hands. So in this case, 50,000 rupees will be clubbed. But guys, there is a condition in this case. The condition is that this business or this transfer should have happened only on the first day of the year. Guys, what if you transfer this gold today on the 15th of August and your spouse introduced it in the business on 15th of August? Then this year, no clubbing. Next year, yes, next year clubbing. So that means for clubbing, you should have used it for the whole year, guys. Yes, you should have held it for the whole year. I repeat, guys. Guys, what if the transfer and the introduction in the business happened on 1st of April? Then will clubbing apply? And yes, what if it happens today, guys, on August 15th? Then clubbing will not apply this year. Next year? Yes, next year clubbing will apply. Alright. And guys, one more thing. Guys, this is you and you've given some debentures to your spouse without any consideration, and your spouse has earned interest income of 1 lakh rupees, please tell me, will the dog go back? Will clubbing apply of this 1 lakh? Yes, clubbing will apply of this 1 lakh. So will it be added here? Yes, it will be added here. Clubbing will apply. This is the first level of income. Guys, what if from this interest of 1 lakh, your spouse buys certain shares of 1 lakh? Guys, is this second level of income? No, guys, this is not second level of income. When you buy shares, there is no income. From the shares, guys, you have got dividend of 20,000. Is this second level of income? Yes, this is second level of income. I hope you understand, guys. Yes. So buying shares is not second level. So please understand the difference between asset and income. This is asset and this is second level of income. Now, will this be clubbed in the hands of X? No, only first level will be clubbed for all adults. Why, guys? Adults have a mind of their own. So spouse, son's wife, etc., except minor child, second level, which is called accretion of income, will not be clubbed. So guys, I'm just giving you questions. Please tell me. I'm just talking about second level of income. Second level of income of minor child. Will it be clubbed? No. Second level of income of spouse. Will it be clubbed? Sorry, my bad. Second level of income of minor child. My bad, guys. Will be clubbed? Yes. Because they don't have a mind of their own. Second level income of spouse? No. Of son's wife? No. So all adults second level will not be clubbed because they have a mind of their own how to invest and get second level of income. Alright, so with that, guys, we move ahead. This, I think, chapter is done and dusted. Guys, just like clubbing of income, will losses also be clubbed? Yes, same thing with income, same thing with losses, even losses will be clubbed. Guys, now it's time to open the ICI material and let's do all the sums from the ICI material before we move to the next chapter. Here we go. So this is the module. This is the chapter overview, which is very confusing. This is section 60, clubbing will apply. Yes. This is section 61. 60 is very simple, guys. Watson has transferred through a duly registered document the income arising from a godown to his son without transferring the godown. Guys, have you transferred the income? Yes. Have you transferred the asset? No. So section 60 clubbing will apply. But this is son, guys. Why didn't I go to section 64? Because 64 is only for minor child, not for son. Next, guys, this is section 61. Sorry, my bad. This is section 61 where also clubbing will apply. This is 62 where it's an irrevocable transfer, and 63 just defines what is an irrevocable transfer. This is section 64(1), transfer to the spouse, remuneration in cash or in kind. This we've already discussed. Let's see this example, guys. Everyone, the more you draw diagrams, the easier it is to answer these kind of questions. Mr. A holds shares carrying 25% voting power in X Private Limited. So this is A, and he is a substantial interest in a company called X Private Limited. Mrs. A is working, guys, this is Mrs. A. She is working as a software programmer in the company at a salary of 30,000 per month. So basically, she is getting 30,000 per month. That is 3,60,000 in the year salary. Guys, in salary, you get a 50,000 rupees flat deduction. She is, however, not qualified for the job. Guys, is this salary linked to her qualification? No. So guys, will income be clubbed? Yes, income will be clubbed. So here clubbing will apply of how much amount, guys? Not 3,60,000. You will always compute first and then club. So 3,60,000 minus 50,000, that is 3,10,000, will be clubbed in the hands of A. Which section will you use, guys? Always section 64(1), because remember, one spouse, one son's wife. Will your answer be different if Mrs. A was qualified for the job? Yes, answer will be absolutely different. In case she is qualified for the job, guys, will clubbing apply? No, clubbing will not apply. Then who will pay the tax on this 3,10,000? Mrs. A will pay the tax on 3,10,000. Perfect, guys. Good job. Good understanding. Here we go. And the next question. Mr. B holds shares carrying 30% voting power in Y Private Limited. So this is B. And he holds shares in Y Private Limited. 30% shares. Yes. So substantial interest. Mrs. B is working as an accountant. So this is Mrs. B working an accountant in the company, getting income under the head salary computed. So they've already computed the salary of 3,44,000. Without any qualification. So is it linked? No, it's not linked. Guys, so will clubbing apply in this case also? Yes, clubbing will apply. This income will be clubbed in the hands of Mr. B. So Mr. B, this is the Mr. B's calculation, 3,44,000. But why did we not minus 50,000? Because of the word computed. If it's computed, that means you've got the final answer. So clubbing will apply here. Yes, compute the gross total income of Mr. B and Mrs. B. Mrs. B doesn't matter. Mr. B is what it matters right now. Next, guys, transfer of asset. If it's transfer of house property, guys, will clubbing also apply? Yes, but under a section called section 27. Accretion, no clubbing will apply. Transfer an asset invested in the business. Guys, if it's invested in the business, the same concept like partnership firm, but the investment should happen from the start of the year. All right. On the first day of the previous year. Guys, I've highlighted the module in a way that if you read only the yellow part, you'll be good to go. But trust me, guys, I have an even shorter way for you to get good marks in the exam. If you've been my student, you have my handwritten notes. Read my handwritten notes and then do as many sums as you can. And this is a sure, short, tried and tested method to get good marks in the exam. The more you get involved in these concepts, the less you will focus on the sums. So finish the concepts really well and then move on to the sums. All right. Guys, looking at this one, everyone watch out. Mr. Webber started a proprietary business on 1st of April 2020 with a capital of 5 lakh. So this is Webber. He started a business with an investment of 5 lakhs. In which year? 2021. He incurred a loss of 2 lakh during the year. So unfortunately, Webber in COVID, he incurred a loss. So now his business capital is 3 lakh. To overcome the financial position, his wife, Mrs. Vaishali, a software engineer, gave a gift of 5 lakh in the next year, 1st of April. So guys, in the next year, his wife also put 5 lakh rupees. So guys, is this a gift without consideration? Yes. But gifts, will not be taxed because it's coming from a relative. So gift will not be taxed. But now this business, guys, of 8 lakh rupees, how much is Webber's contribution? 3 by 8. And how much is the wife's contribution? 5 by 8. So guys, is this like a partnership firm and will clubbing apply? Yes, clubbing will apply. Is it from the first day of the year? Yes. He earned a profit of 4 lakh during the year. So out of 4 lakh, guys, if you divide it by 8, which is 50,000, into 5, that is 2 lakh 50 will be clubbed in the hands of wife. 1 lakh 50 will be his income. So 2 lakh 50 and 1 lakh 50. Very, very simple, guys. Very, very simple. Perfect. So this is again for the benefit of spouse. This is same son's wife, guys. Same concept here also. Same that business concept will also apply to the son's wife also. So if you transfer gold to your son's wife and she starts a business, even then the same partnership firm concept will apply. Let's do this question. Mrs. Kasturi, very good question, guys. Mrs. Kasturi transferred her immobile property to ABC Company Limited. So Kasturi transferred the immobile property. The pet is going to ABC. It's an immobile property. But please tell me, who does the pet belong to? K. All right. And subject to the condition that out of the rental income of 36,000 per annum shall be utilized for the benefit of her son's wife. Guys, please tell me, is there a condition on this transfer? Yes. So is this a fake transfer? Yes. So will clubbing apply? Yes. Mrs. Kasturi claims that the amount of 36,000 utilized by her son's wife should not be included in her total income as she is no longer owning the property. As this one, the contention of Mrs. Kasturi is not valid in law. Yes, the income of 36,000 meant for the benefit of daughter-in-law is chargeable to tax in the hands of Mrs. Kasturi. So guys, there are various ways of looking at it. One way of looking at it is you can quote section 61 and you can say this is a revocable transfer and hence K will be subject to tax. Or you can also quote section 64(1) son's wife, and any income from the son's wife from assets you have transferred will also come back unless there is adequate consideration. Alright, so there are two ways to tackle this. Clubbing of income of minor child, guys, very important. You should know minor child really well. Sim income you should know. Let's see how we answer this one. Mr. A has three minor children, guys. Lack of family planning. Three children here. Two twin daughters, age 12 years, and one son, 16 years. So 12 years, and son who is 16 years. Income of the twin daughters is 2,000 per annum each. So 2,000 income and 2,000 income. And that of the son is 1,200 per annum. So this is 1,200 per annum. So Mrs. A has transferred her flat to her minor son of 1/4/2001 out of natural love and affection. The flat out was let out on the same date and the rental income of the flat is 10,000 per month. So the son, minor son, also gets 1,20,000 from house property. Guys, this is house property, but we have to compute it first before we club. Compute the income in respect of minor children. So please tell me, guys, first, will this income be clubbed? This 2,000? Yes, but you will minus 1,500. So how much will be clubbed in this case? 500 will be clubbed. So here, guys, 500 will be clubbed. I'm putting this in a box. Next, here also 1,500 will be exempted under section 1032. Here also 500 will be clubbed. Here, guys, out of 1,200, guys, here entire 1,200 you will minus. So how much will be clubbed? Nothing will be clubbed in this case. But let's see the house property. Guys, the moment it is house property, it is not under section 64(1)(a), it is under section 27. And in section 27 there are some exceptions. So let's see that, guys. The flat was let out. Mrs. A transferred a flat to her minor son on 1/4/2021 out of natural love and affection. The flat was let out on the same day and the rental income of the flat is 10,000 per month. They are saying only for 64(1)(a). So guys, will this house property income be clubbed in 64(1)(a)? No. Guys, what if the sum had 64(1)(a) and 27? Then would you club? Yes. How much would you club? You would club 1,20,000 minus 30%. That is into 70%. This is what you would club. That is a very important question. Lots of people feel, oh, why only 1,000? Why no son? Why for minor son they've not taken the house? They've not taken the house because that is under section 27. And the question says only calculate as per section 64(1)(a). I hope this is absolutely clear. If there is any doubt, let me know, guys. I will move ahead only if you are absolutely clear on this, guys. Yes, perfect. Guys, looking at this next sum here, compute the gross total income of Mr. and Mrs. A. So this is Mr. and this is Mrs. Guys, if there is anything of clubbing, you will wait till you find their first income. Salary of Mrs. A, 2,30,000, of course 50,000 deduction. So 1,80,000 is Mrs. Income from profession of Mr. A, 3,90,000. Right now Mr. is winning the race, he is higher income. Income of minor son B, income of minor daughter C, interest on FD of C, gift received by C. So now, guys, all children's income, whom will we club it in whose hands? In Mr.'s hand because he has higher income. So let's do clubbing, guys. First, income of minor son B. Will we add 15,000? Yes, but you'll minus 1,500, so 13,500. Income of minor daughter C from special talent, no clubbing. In this case, she will pay the tax, but she is basically below exemption limit. Interest on from bank received by Mr. C on deposit made out of a special talent. This is second level. It will be clubbed. So 1,500 will be minused here for C. For B, we've already minus 1,500. And now again C, Gift received 2,500. Now very interesting guys. Will clubbing apply? First you need to compute. Now guys, is this gift more than 20,000, sorry, more than 50,000? No. If it is not more than 50,000, then guys it is not taxable. If it's not taxable, will clubbing apply? No, clubbing will not apply. All right. I'm just showing you the answer here. So 3,90,000, 13,500. And special talent no clubbing, interest from blank clubbing, and gift 2,500 is not club. Because guys, anyone who thinks it should be club, please understand, first you need to compute and then you need to add. I'm giving you an excellent example on the screen guys. This is you've transferred 5 lakhs of cash to your spouse, and the spouse invested this in an actual partnership firm. She became a partner, she invested the 5 lakh rupees as a capital. The partnership firm paid the tax and the spouse's share of profit is 1 lakh. How much clubbing will apply? Guys, X gave the money to the spouse without consideration. She invested in a partnership firm. The entire money, none of it is her money. The entire dog is X's dog, so will it go back? Ideally guys, it should go back, but please remember, partnership firm profit is exempt. This is not taxable only, it is exempt. And if it's exempt, will clubbing apply? No, clubbing will not apply. ICI will give you these kind of tricky questions guys. So please understand, clubbing will not apply. What if she had invested in 5 lakh rupees in agriculture and she got some agriculture income of 1 lakh? Will clubbing apply? No, because it is exempt income, so no clubbing will apply. I hope these concepts are clear now guys. Yes, moving ahead. All right guys, this is cross transfer. You can always look at it, no problem. Very easy to identify this cross transfer. This is HUF. This is distinction between 61 and 64. 61 applies to all persons, 64 only applies to certain specific relationships. This is summary, and we now come to our questions at the back of the book. Mr. Sharma has 4 children, 2 daughters, 2 sons. While we read, you tell me clubbing will apply or not after minusing 1,500. The annual income of 2 daughters, 9,000 guys, will clubbing apply? Yes. 4,500 will clubbing apply? Yes. Son, will clubbing apply? Yes. Will clubbing apply? Yes. The daughter who has income of 4,500 was suffering from a disability, so suddenly this answer will change. Now clubbing will not apply. First level also or any level, clubbing will not apply. So that's your answer here. The section is 64(1)(a). During the previous year, the following transactions occurred in respect of Mr. A. Guys, this is a very good question. Compute the total income of Mr. A, Mrs. A and their minor child. Over to you all. I'm giving you 2-3 minutes to read and then we'll discuss this together guys. Alright, let's patiently discuss, guys. First, I'm writing here A, I'm writing here Mrs., and I'm writing here minor child. During the previous year, the following transactions occurred. Mr. A had a fixed deposit of 5 lakh in Bank of India. Okay, the pet is of Mr. A. He instructed the bank to credit the interest on the fixed deposit at 9% for the whole year. So 9% on 5 lakh, guys. 5 lakh into 9%, that is 45,000, to the saving bank account of Mr. B, son of his brother, to help him in his education. Guys, they are trying to make it very sentimental here. You're Mr. B, son of a brother, etc. But doesn't matter, guys, if you're transferring income without transferring asset. And is this spouse, or is it son's wife, or is it your minor child, or is it your HUF? No. Then in that case, guys, will the income be clubbed back? Yes, 45,000 here. But remember, for saving bank account interest or FD interest, you might also get a deduction, but they have not asked for that. They've only asked, okay, they have asked for total income, but we'll not discuss deductions because we haven't done it. Mr. A holds 75% profit share in a partnership firm, so substantial interest, yes. Mrs. A received a commission of 25,000 from the firm for promoting the sales of the firm. Mrs. A possesses no technical professional qualification. Will clubbing apply? Yes, clubbing will apply in the hands of Mr. A. Mr. A gifted a flat to Mrs. A on 1st April 2021. So guys, this is the asset. Is this a pet of Mr. A given to Mrs. A? They have not separated and no adequate consideration. During the previous year, 2021-22, Mrs. A income from house property computed was 52,000 from the flat. Guys, will it be added? Yes, it will be added, 52,000. Guys, what of this flat was given in the middle of the year? Then only half clubbing, guys. If it's in the middle of year, then only half clubbing, because half anyways will be added in his income only. Mr. A gifted 2 lakh to his minor son, who invested the same in a business and derived income of 20,000 from the investment. Guys, business is not sim income. Unless they say skill, intelligent, manual work, do not assume to be sim income. So this 20,000, will it be clubbed? Yes. But will you minus 1,500? Yes. So 18,500 will be clubbed here. And Mr. A's minor son derived income of 20,000 through a business activity involving application of his skill and talent. Will income be clubbed? No. So here 20,000 is the income of the minor child. During the year, Mr. A got a monthly pension of 10,000. So 10,000 into 12 is 1,20,000. Monthly pension is taxed under salaries. So 1,20,000, but you get a 50,000 deduction. So 70,000 here. And Mrs. A received a salary of 20,000 per month from part-time job. So 20,000 into 2 into 12, 2,40,000 minus 50 is 1,90,000 here. Guys, in this case, now things will change because she seemed to be having more income. So let's change, guys. 70,000, 1,90,000, this will not change. Mr. A's fixed deposit of 5 lakh, this will not change. 75% share of profit in a partnership firm, Mrs. A received a commission of 25,000, this will not change. Mr. A gifted a flat to Mrs. A, this will not change. So now guys, only for 18,500, let's first check whose hands will it be clubbed. So I'm calculating Mr. A's income, 45,000 plus 25,000 plus 52,000 plus 70,000 is 1,92,000. And Mrs. income is 1,90,000. Now please tell me, where will this 18,000 be added, guys? 18,500 will be added here itself. Our answer was right, but we have to do the wrong, we did the wrong calculation, guys. We have to first finish everything and then do clubbing of income with the minor child. I hope this is clear. Just checking, guys. Are you getting 1,92,000? Are you getting 1,90,000? And then you added 18,500. So please, in the exam, remember, read the sum once, try and do manual calculation and then do the fair calculations so that you don't go wrong. All right. Mr. A has gifted a house property valued at 50 lakh. House property means with section, guys, 27. To his wife, Mrs. B. So A gave it to B. The cat belongs to whom, guys? The cat or the dog belongs to A only. And Mr. B gave the same to Mrs. C, their daughter-in-law. So she gave it to the son's wife, guys. So please tell me, will the cat come back to first B and then to A? Ultimately, guys, who will be taxed on this income? Ultimately, A will be taxed. Will your answer be different if the said property was gifted to his son, husband of Mrs. C? Guys, if this was gifted to the son, Guys, if this was gifted to the son, then in that case, guys, what will happen? Let's check. Guys, if first let's see this, guys, section 27. In this case, Mr. A would be the deemed owner of the house property transferred to his wife without consideration. And as per section 64, Mrs. B. So ultimately, guys, who would get taxed? Ultimately, A would get taxed. So here, let me give you the final answer here. Yes, ultimately the income of 2,10,000 would be included in the income of Mr. A. Alright. Now the second part. Yes, if you transfer it to the son, if this was not to the son's wife but to the son, guys, in case of son, does clubbing apply? No, guys, clubbing of income does not apply in case of son. So then this 2,10,000 would be applicable in whose hands? It will be taxable in the son's hands. Alright, tricky question, guys. I hope you understood this. Let me repeat, guys. Clubbing will only apply even in 27 and even in 64. Clubbing will only apply for spouse and minor children, not for major children. If you transfer it to the major child, they will pay their own taxes. Alright. Next, guys. A proprietary business was started by Srimati Rani in the year 2019. As on 1/4/2020, her capital in the business was 3 lakh. So guys, this is her business. This is the year 2021 and her capital was 3 lakhs. Her husband gifted 2 lakh on the 10th of April 2020. Guys, this is the middle of the year. Will clubbing apply in this year? No, guys. Her profits from the business was 1 lakh 50. So 1.5 lakh will be added to her income only. So her capital becomes 4.5 lakh. Next year, guys. Next year, her capital is 4.5 and she was gifted 2 lakhs by her husband. So next year, guys, of the profit of 3 lakh 90, will clubbing apply? Yes, clubbing will apply in the same proportion, guys. So you'll have to do the proportion 4.5 divided by 6.5 and 2 divided by 6.5. I'm not doing the calculation, but this is what it looks like. I'm just showing it to you here. In the first year, 3 lakh, no clubbing. And the next year, guys, this 3 lakh 90 will be clubbed in the hands in the respective proportion. So just reading, capital investment, start of the year 3 lakh. Gift received 2 lakh. So it became 5 lakh. Sorry, my bad here. I did one small mistake here. Let me correct it. Yes. Guys, her business started with 3 lakh rupees. So her investment in the year 2021 was 3 lakh. Her husband gave 2 lakh rupees, which was also invested. So the business investment was 2 lakh. So totally 5 lakh, but no clubbing in that year. And the entire profit of 1.5 lakh. So now her business capital is 3 plus 2 plus 1.5. So basically her business capital is 6.5. Now out of 6.5, she has invested 4.5 and her husband has invested 2. So in that proportion, you will have to basically do clubbing. Perfect. And last, guys. Mr. B is the Karta of an HUF whose members derive income as given below. Guys, let's check. Examine the tax implication in the hands of Mr. and Mrs. B. So this is Mr. and this is Mrs. Income from B's profession, 45,000. So I'm putting it here. Mrs. B's salary as a fashion designer, 76, but it's not computed. So 76 minus 50, that is 26,000. Minor son D, I'm not going to do unless I know their total income. I'm not going to do any clubbing. Minor daughter P, D's winnings. So yes, now I can do clubbing and the clubbing will happen in the hands of Mr. Minor son D, interest on FD with a bank which were gifted to him by his uncle. Guys, will it be taxed in the uncle's hands or in the parent's hands, guys? Always in the hands of the parent, but you will minus 1500 rupees. Minor daughter's P is earning from sports. This is skill, intelligence, and manual work, so no clubbing. D is winning from lottery. Guys, first up, D we've already minus 1500. So here you will not minus any 1500. This will add 1,95,000. Showing you the answer here. Income of 1,95,000 arising to minor son D from lottery shall be included in the hands of Mr. B as income from other sources since Mr. B's income is greater. Then the income of Mrs. B before including the income of minor child. Guys, they've given some TDS implication here, which I can discuss only when we discuss TDS. But remember, on any winnings, you get some TDS deduction. Can the father take the credit? Yes, the father can take the credit. Perfect, guys. Very, very nice chapter. This a lot of people feel it's very easy. I won't do it, but a lot of importance are attached in this from an exam perspective. Very important chapter. So we've been in the session for about 1 hour 11 minutes, and I saw 11 seconds also. So 1 1 1 1 1, very auspicious, they say. So we are going to take like 3 4 minutes here, and we'll come back and we'll dive into a chapter called PGBP. One of the most hyped up chapters of tax is called PGBP. But when we do this chapter, I'll give you ways and tricks, and I will show you how exam puts PGBP questions before you. So we'll try and do a very different strategy, guys, here. Of course, clubbing of income, guys, something is left. Let's finish that. Exam questions are left. 1 minute. So here is a question bank. Yes. Guys, let's do some exam questions. Mr. Mahadev, a noted bhajan singer of Rajasthan, and his wife. So this is Mahadev and this is Darya. Furnish the following information. Let's see, guys. Compute the total taxable income of Mahadev and Darya for the year 1920. Income of Mahadev, professional bhajan singer, so 5,65,000 year. Guys, these are 5 marks. Help me score 5 marks and help yourself also score 5 marks. Salary income of Mrs. D computed 3,80,000. So we've got both of them here. Next, loan received. Excellent question, guys. Loan received by Mr. D from a company. Mr. D holds 35% shares in the company. The company has incurred losses since its inception. Guys, 1 minute. First, please tell me, forget everything, and please tell me, is this a loan amount? Yes. Is loan income? No. But think about it, guys. Do we know deemed income now or deemed dividend? And can a loan from a closely held company be deemed dividend? Yes. She is a beneficial interest holder in a private limited company, so this can be deemed dividend, but unfortunately the company has only incurred losses since the start. So will it have any accumulated profits? No. So although you will write deemed dividend, but you will write 0 here. Next, income of minus and Golu, we will wait for clubbing. First we'll see both their income, so this we'll wait. Golu, cash received from Golu, again we'll wait. Interest income received by minor married daughter, again we'll wait. So now we can do clubbing. In whose hands will we club, guys? We will club in the hands of Mahadev. Income of their minor son Golu from winning singing reality show. This is skill intelligence manual work, no clubbing. Cash gift received by Golu from friend of Mr. Mahadev on winning the show. Guys, on winning the show, when you get cash gift, that is not sim income. So we'll check, is this more than 50,000? No. So hence no clubbing. Why no clubbing? Not because it's sim income, but because it's less than 50,000. Some people think that this is taxable. Chirag, I hope you understand why this is not taxable. Guys, you have to see the same thing. You have to compute first. If it's taxable, then you can tax. Interest income received by minor married daughter. Guys, minor married daughter, is it the same like minor child? Yes. So interest income of minor child Gudiya from deposit with a company. Guys, will it be clubbed? Yes. How much? 38,500. So this is Mahadev's income, this is Darya's income, and these are your 5 marks. Alright. Guys, this is November 26 marks. You can do this as a self-study thing. I'm doing the 4th one, that is July 21 for 5 marks. 50,000 limit because it is a gift. Absolutely right. So Akshat, the shortcut is, or the basic thing is, you have to consider the minor child as a full-fledged individual. You have to first calculate his income. Only if it's taxable, then you will club. So clubbing is the last step you do. If it's 21,000 and it's not taxable, then you won't club. Alright. Guys, this is Dharmesh and his wife Anandi, D and A. I'm writing D here and I'm writing A here. Salary income of Anandi 9,60,000. I'm taking only 9,10,000 because 50,000 standard deduction. Income of minor son A, we cannot do anything right now. Income of minor daughter C, can't do anything. Income from garment trading business 17 lakh 50. Oh, sorry, it's computed. My bad. It's computed. Yes, yes, yes. So whenever I make a mistake, I can always make an excuse that I was just checking if you guys are alert or not. All right. So you guys are alert. Yes. So 9 lakh 60 here, 17 lakh 50 here. All right. Now I was just checking other incomes. Cash gift received by minor daughter C, income of minor daughter B, income of minor son. So now clubbing can apply. Whose hands will I do the clubbing, guys? I will do the clubbing in D's income. Our foundation teacher. All right. But I'm admitting it's my mistake, but I'm just trying to cover up for it. All right. Income of minor son, guys, everyone please participate and tell me if this clubbing will apply here. Income of minor son A who suffers from disability, no clubbing will not apply. Minor son will pay the tax on this. Income of minor daughter C from script writing, this is skill, intelligence and minor work, guys. Script writing, especially Indian serials, you need a lot of creativity to write those scripts, so hence not taxable. Next, cash gift received by minor daughter C from friend of Mrs. Anandi on winning a story writing competition. Guys, cash gift received is not sim income. First, guys, please see, is this more than 50,000? See, it can be taxable, but because it's 45, it will not be taxable. What if this was 55? Then it would be taxable. So this is not taxable. Income of minor son B from scholarship received from his school, sim income, not taxable. Income of minor daughter B from fixed deposit made out of income from scholarship, guys, is the second level of income. Yes, so this is the only thing which will be added, guys. Such a bogus sum, only one thing added, that is 3,500. But this is an exam sum, so we are done with it, guys. I'm looking forward to a small 5-minute away. But sir, scholarship is exempt anyway, right? Yes, scholarship is exempt, but yes, you can think of that way also, and you can think of that way that it is sim income. But just one word of caution, Akshat, scholarship, only notified scholarships are exempt, so it should be a notified scholarship. Yes. All right then. Guys, taking 5 minutes of presentation of answer, we will be giving reasons for everything. Yes. See guys, how do you present this? I'll just show you how do you present this. So first, you will take the last line. They have said compute taxable income of Mr. and Mrs. A. So you will write computation of income of Mr. A, Mrs. A for the year this. Then you will have a particulars column, you'll have an amount column, and you'll have an amount column. Instead of amount column, here you'll have A column, Mr. A, one column, and Mrs. A, one column. And then let's say one by one, you'll put all the incomes. First, you'll put salary income computed, and you'll put Mrs. A, 9 lakh 60. Then you'll write PGBP textile business income, and you'll write, sorry, this was Mrs. A, so 9 lakh 60 here, and dash here. In case of PGBP, dash here and 17 lakh 50 here. And guys, for every income, what you have two options. One, you can write income of minor daughter C and write working note 1, and you put a dash and then you explain why did you not club it. Then you write income of minor daughter D and you don't put anything and you write working note 2. Instead of writing explanations here, you tell them why in the working notes why did you not club it, and every time you write, you will quote the section 64(1)(a). And when you club, let's say minor daughter C interest income, when you club and let's say you club 38,500, you will show the calculation here 40,000 minus 1500 under section 1032. These kind of explanations you have to give to get all the marks. I hope that is clear. You can quote sections in working note. Yes, working notes form part of your answer, guys. So working notes also get marks. In fact, working notes get a lot of marks. Perfect. Guys, 5 minutes and we'll be back and we will dive into PGBP. Brace yourselves, prepare yourselves, and in 5 minutes we will start. Questions in the chat box, please. Thank you. Alright, and guys, it's time to face the elephant in the room, guys, or to discuss that. So we're looking at a chapter which a lot of people find very difficult, confusing, overhyped, etc. Let's domesticate or let's tame that animal. That animal is called PGBP. But before we get there, I want to discuss some general rules of tax, guys, that you should probably know before you enter this chapter called PGBP. But of course, guys, you know what is a business, you know what is a profession. I'm not going to define them. What I'm doing right now is basically a profession. I'm into education and this is a profession. But what if I sell calculators, or what if I start selling cameras or the laptops? Then I'm into a business, you know that. We'll talk about it more, but I want to know that a general rule exists, which you also know, which if there is any income, if there is any income from my business and profession, will the government want to tax it? Yes. They will want to tax my income. Yes. But if I'm offering them income, will they give me a deduction? Yes. So this is the general rule which you should know, that you will be taxed on the incomes, but the government will also give you heartedly, they will give you wholeheartedly all the deductions. So guys, let's talk about me and let's talk about my PGBP. Guys, whenever I charge a class like Unacademy, etc., will that be my income under PGBP? Yes. So my classes income, is it my income? Yes. On the side, I'm also a partner in a partnership firm. Let's say the firm earns income or the firm pays me some money. Will that also be taxed, or I get salary, etc.? Yes, that will also be taxed here. Yes, we'll discuss more about salary from partnership firm. So I will basically be taxed on my incomes here. And now guys, I'm giving you examples. You tell me, can I take deduction of that? This office that I'm sitting in right now, it's my own office, but let's say it was rented out. So could I take rent as a deduction, guys? Yes. That electricity expense of this office, can I take that expense? Yes. The salary that I pay or that we pay in a partnership firm, let's say it's my CA firm only and assume it's a proprietorship firm, can I minus salary also? Yes. If guys we get late at work and we order food for the employees, can I minus those expenses also? Food? Yes. Next guys, to keep the employees happy, we give a Diwali bonus or we give a year end bonus or tax return season bonus. So can that also I take as a deduction? Yes. Next guys, every year we have an annual offsite for all the employees. Can I take that expense also? Yes. So basically, can I take any expense which is in relation to my business or profession? Yes. Now, sir, we have profession also for exam. Yeah, it's the same. Business and profession is one and the same. All right. Next, guys, I have contributed. I have put some money in the employee's bank account. Will I get a deduction for that? Yes. I have put money in the employee's provident fund account. Will I get deduction for that? Yes. I have put money in the employee's national pension scheme account. Will I get deduction for that? Yes. I have put money in the gratuity account, gratuity fund account of the employee. Will I get a deduction of that? Yes. Guys, all these are meant to keep the employees happy, so I will get a deduction of that. And guys, can I follow cash system of accounting here or accrual system of accounting here? Yes. Guys, in PGBP and in IFOS, these are the only two places where you can choose the method of accounting, whether I want to follow cash or accrual system of accounting. In cash, only when you pay, I can take a deduction. In accrual, even if I don't pay, even if I'm going to pay, I can still take a deduction. Next. Let's say I've taken a business loan, guys, and for the business loan, can I take a deduction of the interest? Yes, I can take interest deduction also. Next. Just one second. Guys, very carefully, I've taken a loan to pay dividend to the shareholders. Can I take a deduction of that interest also? Yes. But I've taken a loan to pay income tax. Can I take a deduction of that interest? No, I cannot. So basically dividend interest is allowed, but income tax interest is not allowed. I have paid some money. I have paid some income tax. Will that be allowed? So let's see what is not allowed. I think you should be able to answer what is not allowed. Please tell me, if I pay some income tax, will that be allowed? No, income tax is not allowed. But for this office, I paid municipal tax. Will that be allowed? Municipal tax? Yes, municipal tax will be allowed. Next, guys, I paid some money without deducting TDS or without paying TDS. Will that be allowed? No, that will not be allowed. TDS violation not allowed. If you pay to a non-resident, 100% disallowed. But if you pay to a resident, 30% disallowed. Same concept like in IFOS. All right. Main thing, guys, I purchased, let's say, a new laptop. Can that expenditure be allowed? Purchase of a laptop? No, guys, that is not allowed. Only depreciation on that is allowed. Please understand, purchase of assets, I will not get any deduction. Only depreciation I will get. Guys, what if I paid some person repairs for repair of laptop? Can I take a deduction for repairs? Yes, I can. But what if I paid some person in cash more than 10,000? Will that be allowed? No, cash more than 10,000 per person per day is not allowed. There are some exceptions. We will discuss those exceptions of cash. So all in all, guys, will I get deductions of all the incomes? Yes, or sorry, of all the expenses? Yes, as long as they are in relation to my business and profession. Guys, I take a family holiday. Can I take a deduction for that? No, I can't. So I cannot take any personal expense. No personal expenses are not allowed. All right. At the end of the day, guys, do I have to show the government how much profit or loss I have made? Yes. So do I have to arrange my accounts? Yes, I might have to arrange my accounts. Then, guys, can it be possible that I manipulate my profits or my losses? Yes, guys, a lot of people manipulate it. Example, if I go for dinner today with my family and I can I debit it here, who will come to know, guys? Now, is someone checking who came with me for dinner? No. Guys, what if I book a plane ticket from Mumbai to Delhi for my friend's wedding and I say that it's a business expense, guys? Is someone checking me? No, no one is checking me. So hence the government says, listen, if you're a big fish means if you're a big businessman, then you'll have to audit your books. So arrange your accounts and audit your books. In certain cases, you will have to arrange your accounts, and those accounts will also have to be audited in certain cases. And guys, is this entire process very elaborate in real life? Do you have to maintain one bill, one invoice? Yes, it is very elaborate. So can we not presume our income and our taxes? Can we have something called presumptive income? Yes, we can have presumptive income, but again, for smaller businessmen, we have presumptive income. All right. And now I'm giving you examples. Please tell me, are they business or profession? Guys, Unacademy, is this a business or profession? Yes. Guys, honestly, between business and profession, you don't need to know, because whether it's business or whether it's profession, guys, where will it be taxed? In the same head. So do you need to know the difference between business and profession? No, guys, all this is bogus. Please don't focus your energies on the difference between business and profession one day before the exam. Focus on the important parts. Never have they ever asked that is this business, is this profession, differentiate 4 marks. No, guys, this is CA inter. You are just one step away from becoming a CA, so they will not focus your energy on this. So what is business, what is profession does not matter, but just tell me, is this business and profession together? Unacademy. Yes. Um, let's say someone selling this AC, Blue Star. Starbucks selling coffee. Your doctor, an engineer, an architect. Yes, all these guys are business and profession. Together, they are business and profession. Perfect. All right. So guys, let's try and see what is it. The incomes are given in a section called section 28. So all the incomes from a business and profession are given in a section called section 28. All the expenses are given in sections 30 to 37(1). So take your incomes, let's say the incomes are 1 crore rupees. Take your expenses, the expenses are, let's say, 60 lakh rupees. So you will get PGBP profit of 40 lakh rupees. This is one of the rooms which you open and you calculate. All right. And guys, please tell me, are there some disallowances just like in IFOS? Yes, disallowances are also there, and those will come in section 40, etc. And then there are some sections for arranging accounts, auditing books, and there are some sections for presumptive income. So we will see this in 3 parts, guys. First, we will discuss income and expenses. Then we will discuss disallowances, and then we will discuss the additional points, that is arrange accounts, audit the books, etc. But keep an open mind, guys. I'm going to first do a slightly different exercise. I'm going to show up some exam questions here. You will only tell me, are these in relation and can I minus or not? I'll just show you what we are going to do now. Slightly different approach to this chapter. Here we go, guys. PGBP, slightly different approach. Yes. Perfect. Guys, from this, you will tell me which all are PGBP incomes and which all are PGBP expenses. Guys, imagine there's a party in your house and the parents, all the adults are sitting in one room, all the kids are sitting in one room. And if the kid goes in the adult's room, guys, will they be removed from that room? Yes, same way. You are only looking at PGBP. If there is any other income, you will remove it and you will throw it back into the right room. That's your job for this question. Guys, Mrs. Mithul is a resident individual who's 63 years old and she's a qualified medical practitioner. That means, guys, is she a doctor? And is this PGBP? Yes. Everyone, you have to identify the incomes and the expenses. Guys, consultation fees, is this PGBP income? Yes. Salary received from a hospital? No. Rental income from house property? No. Dividend from foreign companies? No. So if you were to make PGBP income, how much would you have the income as? 12 lakhs. Next, salaries of staff, can I minus that? Yes. Admin expenses, can I minus that? Conveyance, can I minus? Power and fuel, can I minus? Interest on housing loan, guys, can I minus under PGBP? No. Interest on education loan for son? No, guys, remember the golden rule, only in relation to business. Amount paid for scientific research, maybe, we'll see, but this is allowed. So guys, this is how you'll have to figure out in the exam what are the incomes and the expenses in relation to a particular business. Guys, are you sure? Is an interior decorator? Please tell me what are the PGBP incomes. Consultancy charges? Yes. Interest on PPF? No. Interest on saving bank account? No. Employees remuneration? Yes. Office expense? Yes. General expense? Yes. Electricity expense? Yes. Medical expenses depends of employees? Yes. Of family members? No. Purchase of furniture? No, guys, you will only get depreciation. Depreciation? Yes. Interest on national savings certificates? No. So this is how you'll have to identify, guys, in the exam. They basically give you these kind of questions very indirectly. All right. Now, guys, let's start with PGBP. Formally, let's start PGBP. I'm giving you some incomes. So basically, we are starting off with section 28. But again, like an IFOS, guys, you don't need to by heart these incomes. You just need to know that they form a part of PGBP. First, painkillers. There's a shortcut, guys. Don't focus on the shortcut. Painkillers can always easily benefit people to cure knife cuts and bruises. Do you need to by heart this? Not today, guys. If you know it already, great. If you don't know it, no problem. As long as these incomes, each one of them, you know, should be a part of PGBP, you're good to go. First, profits from a business or income from a business, guys. Is this a part of PGBP? Yes. Profits from business and profession. Yes. Next, if you have a business contract, let's say under a business contract, someone is supposed to supply me some raw materials till today and they are delayed, and under the delay they have to pay me 1 lakh rupees. Is that business contract modification, termination, etc.? Is that PGBP? Yes. I'm an association like ICAI and I provide services to my members. Are they taxable? Yes. So association's income is also taxable. Under which head? Some of the incomes are taxable under PGBP. Next, I have some export benefits. What are export benefits? Export benefits are basically when you shop on Flipkart, the more you shop, the more super coins you get. So export benefits are like the super coins. The more you export, the more benefits you get. Can you use those benefits to import without paying duties? Yes. But can you also sell these export benefits? Yes. If you sell these export benefits, the amount that you earn will be under PGBP. Next, very important guys, very important. This one was important, and next this is very important. Guys, I did some work for a client of mine, and instead of paying me money, he booked my flight tickets. Is that a benefit? Yes. Instead of paying me money, he gave me some gold. Is that a benefit? Yes. Guys, generally benefits or gifts go under IFOS. We saw it yesterday only. Please tell me yes or no. Did we see gift taxation yesterday? But this gifts or this benefit is not just random, guys. Is it in relation to my business and profession? Yes. So any benefit or any gift in relation to my business and profession, it will be taxed here. Guys, if your uncle gives you a gift or if your friend gives you a gift, where will it be taxed? IFOS. If your client gives you a gift, where will it be taxable? PGBP. And if your employer gives you a gift or your master gives you a gift, where will that be taxable? Salaries. All right. Next, very important, guys. This one is partner in a partnership firm. Guys, this is a partnership firm. What are the three things they give to a partner? Do they pay them salary? Yes. Can the partnership firm pay also interest to the partners on the money they've introduced? Yes. And can it give share of profit? Yes. Guys, you already know that because the partnership firm has paid taxes, the share of profit of the partners will be exempt. So this is exempt, it will not go in any of the 5 rooms. But this salary and this interest, ideally, where should it go, guys? Where should salary go? Into salaries, that's its house. Where should interest go? Interest should go to IFOS. But partners say, no, we are actually doing a business. And hence, the salary and the interest will not go into their respective heads but will be taxed here only if they are received by partners from a partnership firm. So in the exam, guys, when you say salary received by an employee, where will that go? Salaries. Salary received by a partner of a partnership firm. PGBP. Remember this exception, guys. A lot of people get this wrong. I am hoping you don't get this wrong. Guys, will the employee get a flat 50,000 rupees deduction in salaries? Yes, but will you get a 50,000 rupee deduction in your flat? No, but good part is PGBP, you can take a lot other deduction, not just 50,000. All right, next. Guys, sometimes you are paid a non-compete fee. Non-compete fee is basically so that you do not do some work. Example, you're a good chef, and so that you don't be a competitor to the restaurant, they will give you a non-compete fee that is also taxable under PGBP. Next, this is also something that we did yesterday, keyman insurance, guys. Do you remember keyman insurance? If the business people get it, taxable under PGBP. If you get it, taxable under salary. And if your family gets it, taxable under IFOS. So is it always taxable? Yes, always taxable. Next, guys, conversion. Guys, please tell me, I have a shop and I sell laptops in that shop. If I sell the laptops, guys, will it be a sale? Will it be PGBP? Yes. If I have jewelry, can I sell the jewelry? Yes, I'm a jeweler. I have jewelry. Can I sell the jewelry? Yes, it will be PGBP. I'm a builder. I have lots of flats. Can I sell the flats? Yes, PGBP. But what if I don't sell it? And what if I convert it into capital asset? Even then it will be PGBP because the government says, how do I know whether you've sold it or whether you've converted it? What if you've actually sold it but you're lying and you're saying you've just converted it, and hence whether you're selling it or whether you're converting it into capital asset, both will be under PGBP. So this is conversion of stock into capital asset. I'll repeat, guys. I'm a builder. I've recently made a building. I have 100 flats in the building. Guys, whenever I sell a flat, where will the income go? PGBP. But what if one of the flats I converted into a capital asset like my own flat? Even then PGBP, because the government doesn't know whether you sold it or it's your own asset. So, but if you've not sold it and you've just converted it, example, let's say this is my house, this is a flat, which is basically a stock. This is a stock. but I'm not selling it. I converted it today on 15th of August. I converted this flat into a capital asset. So guys, is this PGBP income? Yes, this is PGBP income. Just one second, guys. Just one second. Yes, guys, sorry, I'm back. So here, guys, what if this, I'll just put it on a new page. Guys, this is a flat that I have and it was basically a stock. I did not sell it, I converted it into a capital asset. Let's say when I created this stock was for 20 lakhs. When I converted it, the fair market value was 50 lakhs. So this conversion, guys, will it be taxed under PGBP? Yes. Whether you sell it or you convert it, it will be taxable at what value? You will take 50 lakh as my PGBP income. And then finally, guys, can I sell my capital asset? Yes, you can sell your capital asset. If I sell my capital asset and let's say I sell it for 65 lakhs, then in my capital asset, guys, what will be my cost? This is my selling price. What will be my cost? The cost will be 50 lakhs because till then the government has already taxed me. Perfect. So I'm just telling you the second part of it. But right now, guys, focusing on the first part, conversion of stock into capital asset is also PGBP income. And last, guys, this is B, specified business, which we will talk later. Guys, this is called PGBP incomes. Repeating it quickly, especially the important parts. Please tell me, partnership firm earned partner earning salary and interest, PGBP. Benefit from business and profession, PGBP. Profits from business and profession, PGBP. Conversion of capital asset, stock into capital asset, PGBP, based on market value. Keyman insurance, PGBP. Non-compete fee, PGBP. Export benefit, associations and business contracts are all PGBP income. Guys, I showed you two exam sums. You don't really need to know so much, guys. Only these star mark ones are important and you just need to identify which room to take it to. You don't need to know too much. Yes, so this is section 28. You don't need to by heart it, especially today on 15th August. Don't by heart it. Perfect. Guys, next is section 29, which is useless because just says take your incomes and minus the expenses. Take your incomes minus the expenses. That is section 29. It just tells you how to compute your PGBP income. Next comes section 30. Guys, section 30 is basically if you pay rent, if you repair, if you pay tax, if you RRT, RI, if you rent, rate, taxes, repairs and insurance. Rent, rates and taxes, repairs and insurance for your land and building. So basically for my office, for my factory, etc., if I pay any rent, rates, taxes, repairs and insurance, will I debit it to my P&L? Yes. Will it be a PGBP expense? Yes. Next, section 31. Can I have plant and machinery also for my business and profession? What if I repair it? What if I insure it? Again, that will be a deduction under PGBP. Yes, guys, you don't have to by heart all of these sections. Not at all. You just should know that it's related to PGBP and you can take it to PGBP. Next, section 32, which we will discuss very soon. It is depreciation, which we will discuss in 2 minutes from now. All right. So guys, this is where we are. We are right now at deductions, and any deduction in relation to your income can be taken. So 32, section 33 is not there. Section 34 is not there. Section 35 we have to do. Section 36 we have to do, and section 37 we have to do. So I'll come back to 32 and 35. These two sections I will come back to. Right now, let's do 36 and let's do 37. All right. So looking at section 36, everyone watch out. Section is not important. I'm just giving you the expense. You tell me, is it PGBP expense? Guys, you're paying insurance premium for your stock in your business, stock and trade. Is this PGBP expense? Yes. Guys, I need answers. Please tell me, you're paying insurance premium for the stock in your business. Is it PGBP? Yes. You are paying insurance premium for your employees' health. Is that PGBP expense? Yes. And let's say you're Amul Federal Cooperative Milk Society and you're paying insurance premium for your cattle. Is that related to business? Yes. Next. You are paying bonus and commission to your employees, to your slaves. Is that a PGBP expense? Yes, I call employees slaves, I call employees masters for various reasons, guys. Best discussed, not discussed right now in a fast track course. But just remember, employees are slaves and employees are masters so that the confusion is avoided of the spelling and the pronunciation. Next. Guys, what if you pay interest on business loans? Is that a reduction in PGBP? Yes. What if it's not paid? What if it's payable? Still, guys, accrual system of accounting, even if it's payable, you get a reduction. What if the interest is on dividend? Still, you will get, that means the loan you've taken for dividend purposes, still interest, you'll get a deduction. What if the interest, guys, is for income tax purposes? No deduction. What if it's interest on interest? No deduction. As here, I'm going to give you a very tricky question here. Please tell me, I'm paying income tax. I'm paying income tax. Will I get a deduction? No. I'm paying municipal tax for my office. Will I get a deduction? Yes. I'm paying GST. Will I get a deduction? Yes. I'm paying interest on GST. Will I get a deduction? Yes. I know people feel no, this is bad in law, this is a penalty, no, but still it's allowed. If you want, you can write a small note somewhere, guys, that GST, municipal tax, all taxes allowed except income tax, and interest on GST is also allowed, guys. This is a part of my QuickBook now, so interest on GST is also allowed as a deduction. Anyways, coming back to interest on business loans allowed, interest on loan taken for dividend allowed, interest on income tax not allowed, interest on interest not allowed. Next. Guys, instead of taking a loan, can I issue zero coupon bonds? That means those bonds which I will get right now 85, but I will pay back the investors 100. Can I issue zero coupon bonds, guys? Yes. Now, when I get 85 and when I pay back 100, GST late fee is not allowed, only interest is allowed. Alright. Guys, focus here on zero coupon bonds. 85 rupees is what I get on the bond. So when I issue the bond, I get 85 rupees. I use it for 2-3 years and then I repay back 100. What is my expense as a company of the zero coupon bond? My expense as a company is rupees 15. Now, will I get this? This is called discount or redemption of zero coupon bonds. Will I get this? Yes, I will get a reduction of this. In which year? First year, second year, third year. Guys, this will be spread over the number of months. So let's say this 15 lakhs is spread over 24 months. So you will do 15 lakhs divided by 24 months. Depends on when you issued it. So let's say you issue it tomorrow or day after tomorrow, or let's say on 18th August. Then you will consider the next month, guys, starting from 1st July, because anything after 15th, you go to the next month. And what if you issued it yesterday, 14th August, then you will consider the months from 1st of August. Let's take an example, guys, for this one. Everyone watch out. I have issued zero coupon bonds at 85 rupees and I'm going to be repaying 100 rupees. So what is my interest expense, or what is my zero coupon bond expense? The expense is 15. Let's assume it is 15 lakhs. Let's assume I've issued 1 lakh such bonds. Now let's say I've issued them yesterday on 14th of August 2022, and I'm going to redeem them on 17th October 24. Can we help calculate number of months? Yes guys, let's calculate. Guys, first 14th August becomes which guys? It becomes 1st August 22, and 17th October becomes basically 1st November 24. So let's calculate months guys. August, September, October, November, December, Jan, Feb, March. 8 months of this year, 22-23. 8 months in the year 22-23. In the year 23-24, entire 12 months. And in the year 24-25, April, May, June, July, October, April, May, June, July, August, September, October, 7 months guys. So there it is 7 months. So totally how many months guys? 12 plus 8 plus 7, that is 27 months. So this 15 lakh will be divided by 27, yes, and into 8 for this year, next year into 12, and third year into 7. Guys, this is pretty complicated, but I have a feeling you'll understand this easily. So this is discount on zero coupon bonds. Is that an expense? Yes, but I'm trying to explain to you how you're going to spread that expense over 3, 4, 5 years. Based on number of months, how you do the round off is this. This is how you do the round off. Guys, I hope this is clear. Next, guys, on the next page is the next one. You don't need to remember the sections. You only need to know if it's connected to your income or to your business and profession. All right. Guys, you contributed to the provident fund account of your employees or your slaves. Can you get a deduction for this? Yes. You contributed to the national pension scheme account of your slaves. Can you get a deduction for this? Yes. And you contributed to the gratuity fund account of your slaves. Can you get a deduction for this? Yes, you can get a deduction for these. Why guys? Because this is almost like keeping them happy, putting money in their bank account. Instead of putting money in their bank account, you have put them in their different accounts: PF account, NPS account, and gratuity fund account. But here guys, national pension scheme was very recently introduced, so there is a limit of how much you can contribute. You can contribute only 10% of their salary. So if their salary is something that we will see in salaries chapter, but if the salary is 10 lakh rupees, how much can you contribute? 1 lakh. What if you contribute more? You can contribute more. You can contribute 1 lakh 20 also, but you will get a deduction of only 10% of their salary. And what if you are a central government? That means what if you are Indian Railways? Then you can contribute up to 14% of their salary. So this is basically NPS. Guys, and if these things confuse you, let me give you a very simple shortcut. If you put money in your slave's bank account as salary, does it make them happy? Yes. And will you get a deduction? Yes. Same way guys, this is also their bank account only. PF account, NPS account, gratuity fund account. These you will get a deduction. Only thing for NPS, there is a limit of 10% or 14%. Next, for gratuity fund guys, there's a small condition. Guys, gratuity is basically you are thanking them because they worked in your organization for many years. So it's basically a thank you to them, that thank you for working with me for more than 5 years. Now, you don't pay this money immediately. You put it in an account, which is called an approved gratuity fund account. Approved means approved by whom? Approved by the government. Or you can also put it in the LIC gratuity fund account. So the account gets accumulated, and when that person finally leaves after 10 years, 12 years, 15 years, you pay him the check of gratuity fund. So if it's approved gratuity fund, you will get a deduction. If it's LIC gratuity fund, you've contributed, you'll get a deduction. But guys, what if you just open a drawer, put the money in that, close it and write gratuity fund? Then in that case, you will not get a deduction now. But when you remove the money and finally pay it to the employee, then you will get a deduction. Guys, think like the government. When finally you pay it to the slave, will you get a deduction? Yes. But in these two cases, you don't have to wait till finally paying the employee. You can take a deduction now only if it's approved or LIC gratuity fund. Repeating this, guys. Quick recap. Are these benefits for the slaves? Retirement benefits, yes. And is the master contributing? Yes. So is it connected to the business somehow? Yes. So will you get a deduction? Yes. Only thing is NPS has a limit of 10%, 14%, and gratuity fund account, it should be approved or LIC gratuity fund. All right. Now very, very different, guys. Very, very important. Guys, the slave also wants to put money in his provident fund. The slave also wants to put money in his national pension scheme, but he does not know how to put money in his accounts. So he tells this employer, he tells the master that, master, when you're paying me salary from my money only, that means from my salary income only, can you put some money into the provident fund or into national pension scheme? Master says, why not? So guys, whose money is this? This is actually the slave's money. The slave tells the master that, listen, master, you are going to pay me 1 lakh rupees salary. So that is my money. From my money only, can you put some money in the PF account, NPS? He says, why not? And he puts the money. Let's say he puts 8,000 in the PF or NPS account. Now, please tell me here, guys, whose money are we discussing in this case? Whose money is this? It is the slave's money. In these three cases, guys, the first three cases that we discussed, whose money it was the master's money. Guys, I want answers in this. Please tell me, in these three cases that we discussed, whose money was being contributed? It was the master's money or the employer's money. Perfect. Now, in this next case, I'm writing in a different font and a different color also, guys. Please tell me, whose money is this? This is the slave's money. So then why is the employer getting a deduction? I'll tell you why. First, the slave tells the master to contribute 8,000. The master said, listen, I'll contribute after 6-7 months. How does it matter? Let me enjoy the 8,000 rupees. Guys, it's almost your parents giving you 1 lakh rupees saying that, listen, put it in the bank account. Guys, the money is with you, 1 lakh rupees. Can you go out tomorrow, day after tomorrow, enjoy? You can put the money later on also. Yes, but the government says no, that is not allowed. And hence, what the government does is, they take this 8,000 and they first add it to the master's income. Is this the master's income? No, it is not the master's income, but first they will add it and they tell the master that, master, only if you pay this amount into the PF or the national pension scheme within monthly due dates, only then we will give you a deduction of this 8,000. Guys, let me ask you a question. What if he pays late after the monthly due date? Then it will be added to the income but no deduction, so the master will be taxed on that 8,000, yes, as a punishment. I'm going to quickly recap this, guys. My explanation is over. Let's do a quick recap on this. Please tell me, do you understand what is a PF account and what is an NPS account? Yes. Can both master and slave contribute to that account? Yes. When the master contributes to that account, there is no problem. You have the whole year till the return filing due date to put money. There is no hurry here. But can the slave also contribute? Yes, the slave also can contribute, but he contributes through the master. So first, will it be added to the master's income? Yes, because it's a push or a encouragement or a threat to the master that, listen, pay within monthly due date. If you pay within monthly due date, example for August, the monthly due date is next month's 15th. So if you pay within monthly due date, will you get a deduction? Yes, and that deduction is here. Alright, perfect. Guys, this was slightly different and difficult and important also. Alright. Next is very simple, guys. Can you use animals for your business, guys? Can you use animals for your business like research purposes, etc.? And what if the animal dies Or what if the animal becomes unusable? Can you write off that amount? Yes, you can write off that amount, and that amount will also be here. That amount will also be deducted in your PGBP. Yes. Just one second. Next, very, very important, guys. In IFHP chapter, did we have unrealized rent? Someone not paying you? Yes. Same way in your business, can you have bad debt? Yes. Now, let's say you supplied certain services or you supplied certain goods, and did you include that income in your business income? Yes. Let's say you supplied certain goods worth 1 crore rupees. Did you include in your income already? Yes, because you follow accrual system of accounting. And let's say out of this 1 crore, let's say 7 lakh does not come back to you. So let's say there is one person who defaults on 7 lakhs. So what will you do, guys? That is bad debt, and you can minus that 7 lakh. Yes, you can minus. So how much will you be taxed on? Ultimately, you will be taxed on 93 lakhs. Now, guys, not next year, not next to next year. Let's say after a few years, that person comes back to you and says, listen, I'm very sorry. I did not pay you back then. Here is 2 lakh rupees that I'm paying you. I can't pay you 7, but I'll just pay you 2. Guys, please tell me, are you recovering some bad debt? Yes. Logically, is that your income now? Yes. This is almost like the unrealized rent, arrears of rent. So will the 2 lakh be taxable? Yes. In whichever year you recover, it will be taxable under PGBP. What if you recover 3 lakh, then 3 lakh, 4 lakh, 4 lakh, 5 lakh, 5 lakh, 6 lakh, 6 lakh, 7 lakh, 7 lakh will be taxable. Alright. So bad debts, are they allowed a reduction? Yes. And once you recover the bad debts, are they again taxable? Yes. But here is a slight difference, guys. You told the income tax authorities that you want a 7 lakh deduction for bad debt. But the income tax authority said, listen, you are trying to fool me. It is not 7 lakhs. You are trying to fool me because you don't want to pay income tax. So you're reducing your income. So this is, you want 7 lakhs, but the officer says, no, I will only give you 5 lakhs. So you were taxed on 95 lakhs in this case. Now please tell me, you wanted 7 lakh deduction as bad debt. You were allowed only 5 lakh. So how much of the bad debt has already been taxed? So 2 lakh has already been taxed. Yes, 2 lakh has already been taxed. Now, guys, in a few years that customer calls up that, listen, sorry, I could not pay you then. Right now, I'll pay you 2 lakh 20. So how much will be taxed now, guys? Only 20,000, because 2 lakh has already been taxed. What if you pays you only 1 lakh 50, then how much will be taxed? Nothing, because up to 2 lakh you've already paid the tax. This is very important. A lot of people don't understand this. All right. So this is bad debt. What else is remaining? Let me check. So this is bad debt, bad debt, bad debt. Yes. Guys, if you pay money to promote family planning, you're doing family planning which is not connected to your business. It is just random family planning. You're helping your employees and you're spreading information about family planning. Please tell me, is this related to your business? No. So ideally, should you get a deduction for this? No. You're a coaching class, you're an academy. Why are you spending money on family planning? So you will not get a deduction ideally. But because the government says that, listen, you are doing a good thing, so we will want to give you a deduction. So for family planning, will you get a deduction? Yes, you will get a deduction. How will you get it? If you spend some revenue expenditure, let's say you've distributed pamphlets worth 1 lakh rupees, will you get the entire expenditure? Yes. And if you spend some capital expenditure, let's say you made a movie and 2 actors are speaking about family planning in that, then you'll get 1/5 deduction over 5 continuous years. But wait a minute, guys, this deduction is only allowed to companies that are Indian companies. This was an exam question. There was family planning and it was a partnership firm. So a lot of people allowed it, but actually it's not allowed, guys. Only for companies, Indian companies, it is allowed revenue entirely and capital expenditure 1/5. And last two deductions under section 36, and then 36 will be over. Guys, this next deduction is, if I deal in shares, guys, or if I deal in commodities online, I deal in shares and commodities online, And this is my business income. That means trading shares like Rakesh Jhunjhunwala is my business income. Trading in commodities is my business income. Then guys, I pay something called STT and CTT. Is this STT and CTT allowed as a business deduction? Yes, it is allowed as a business deduction. This is allowed because I'm taking the business in PGBP. What if you're a student and your share trading and your commodity trading is in capital gain? Then this is not allowed. In capital gain, it is not allowed. In PGBP, is it allowed? Yes. So then everyone should take it under PGBP only, guys? No, because in capital gain, you get something called indexation. All right. And guys, who decides whether it will be PGBP or capital gain? I'll tell you what I do. All my share trading, I take it in capital gain. Why? Because I get indexation there. But do I get STT and CTT there? No. Guys, what if next year I change my strategy and I show my share trading income as PGBP? Will I get STT, CTT? Yes. But will I get indexation? No. So guys, it's the best of both worlds. Guys, if you travel by air, is it expensive? Yes. But is it faster? Yes. So good and bad both. If you travel by train, is it cheaper? Yes, so good part is cheaper, but is it more time taking? Yes, same way guys. This is also STT, CTT allowed as a reduction in PGBP. So these are the expenses under section 36. Let me check guys. 36 is a very humongous section which we have finished really well. 36 done. Insurance, bonus and commission, interest deduction, discount on zero coupon bonds, employers contribution to the provident fund, gratuity fund, national pension scheme, slaves contribution, animals, bad debt, family deduction, STT, CTT. Guys, we'll do just one more deduction and then we will open up to some questions. Let's see. Guys, although we have section 30 to section 36, is it possible to cover every business deduction here? No guys, business is very wide. Did you ever think 5 years back there would be something like cryptocurrency? No. Did you ever think 10 years back that you would be studying probably for CA Inter in front of a computer? Maybe not. So business is ever evolving and hence we cannot predict what kind of expenditure can happen for business. So then they created a new section or they created a dustbin section called section 37(1). And they said that if there is any expenditure which is related to business and profession, but it is not deducted anywhere else, then can you deduct it here? Yes, you can deduct it here. We welcome this. We are a dustbin section. You can put everything in this dustbin as long as there is no other section for that. So I can put 37(1) is like a dustbin section. You can put every expense there which is related to business and profession. But guys, there are two exceptions. These two cannot be put. First one, any expenditure which is bad in law. Guys, I know it's a wrong thing, but in reality is corruption there? Do we pay sometimes bribes, etc.? Is there corruption in reality? Yes. And corruption, if you pay, let's say you're a businessman, you own a restaurant, and to keep the restaurant open late at night, you pay the cops some money illegally. Can I take it as a business deduction? No, I cannot take it as a business deduction. That is bad in law. Next, so any corrupt, any under the table money that you pay, you cannot take a business deduction. Any penalties, etc. If you are levied any penalties and you pay the penalties, let's say penalties under tax, GST, etc., can you take a deduction? No. Guys, someone had asked a question. I don't remember the name, but I want to make a small change, guys. I told you interest on GST. Is that allowed as a deduction? Yes. Even late fees of GST is allowed as a deduction. Someone had asked me that question. I think Bhagyashree. I don't know if she's still there, but that is still allowed. Yes, late fee and interest on GST is allowed. Anyways, coming to the point, bad in law, any corruption payment, any penalties not allowed. Yes. And one more thing not allowed, guys, any secret commission. What is secret commission? Let me give you an example, guys. When you go to a doctor and they tell you that, listen, get your blood test done from this center only, they are getting some secret commission from there. So will the center pay the doctor? Yes, but can they take a deduction for that? Sorry, you will not get a deduction. And one more deduction you will not get, guys, is corporate social responsibility. That means if you build a school for underprivileged children in a village, will you get a deduction? No. But it's such a good thing. Companies should get a deduction. No. So they say CSR. I did not tell you to do CSR expenditure. I am the Income Tax Act. The Companies Act told you to do this deduction. So why should I give you a deduction? So I will not give you a deduction, guys. This is section 37(1). So please remember that 36 had specific deductions. 37(1) is like an open umbrella. It's like a dustbin. You can put anything there as long as it's not bad in law and as long as it is not corporate social responsibility. But corporate social responsibility sometimes is allowed. Example, family planning. Family planning, if it's a part of corporate social responsibility, it will be allowed because section 36 allows it. So unless one of the income tax sections allows it, otherwise you will not get CSR expenditure. So we're done with 36, we're done with 37. Now guys, with sections are left 32, which we will do after we come back from the break. 33 is not there, 34 is not there, 35 is something that we will do right now, and then we will take a break. Guys, India is marching ahead. Today is Independence Day. They say that India will be like a very big superpower in a few years, and I would like to believe that. And the Income Tax Act also has a certain provision for doing something on that level. Guys, there's a section called section 35, which says that, listen, if you spend money on scientific research, then we will give you lots of benefits because you are special. So here it is, guys. Let's try and do something which is scientific research, and let's do it in-house. In-house means yourself or your business or your profession will involve you to do some business research and development. So scientific research you're doing. Let's say you're trying to build a COVID vaccine. Alright, I know guys, COVID is behind us, but still, let's say you're trying to build a COVID vaccine. And for that, guys, will you incur some revenue expenditure? Yes. And will you incur some capital expenditure? Yes. First, let's incur some revenue expenditure. Guys, let's say you started doing research on COVID in the year 2020. From 15th August 2020, you started doing research on COVID. And today, 15th August 2022, finally you figured the vaccine. So guys, today is when your business will start. Today is when you will start earning income from today onwards, but the government says don't worry, even the expenditure that you've done during the last 3 years, any expenditure that you've done, we will give it to you in this year. So that is what is the revenue expenditure, not any expenditure, only raw materials and salaries in the last 3 years. Is that a benefit? Yes. I'll give you an example, guys. If I start my education or my classes today, will I get deductions from today? Yes. But will I get deductions of expenditures last year or last to last year? No, guys. I will not get expenditures last to last year. I want more replies, guys. Please tell me, if I start my class today, from today onwards, will I get deductions of the expenses? Yes. But before today, guys, if I have done some expenditure before today, will I get deduction? No, I will not get. But here is an exception. If your business is into scientific research, then how many years back you will get, guys? 3 years back from commencement of business. 3 years back from commencement of business, you will get any expenditure? No, only raw material and salaries that you paid. You will get a deduction in this year, that is 22-23. You will get the deduction, yes, because you are special. They give you this deduction 3 years back. Next, if you buy a microscope, let's say you buy a microscope and you buy it for 1 lakh rupees. Guys, is this a capital expenditure? Yes. Ideally, where should the microscope go? It should go on your balance sheet. And will you get depreciation? Yes, you will get depreciation. Depreciation at what rate? Let's say for plant and machinery it is 15%. So you'll get depreciation of 15,000. Guys, is depreciation an expense? Yes. Is that a deduction? Yes. Is that a good thing? Yes. But it is slow, 15% every year. So the government says, listen, we usually give 15% depreciation, but you are special. Why? Because you're doing scientific research. So you are special. So instead of giving you 15% depreciation, we will give you a straight 100% depreciation or 100% deduction. So straight 1 lakh will be minused in your P&L under section 35. So what will be the cost of this microscope now, guys? The cost of this microscope will be 0. So is that a good thing? Yes, guys. If someone told you your salary is 15,000 and if they increase it to 1 lakh, is that good? Yes, it's a great thing. Same way, your deduction, your depreciation earlier was only 15%. Now they give you 100%. So is that a good thing? Yes. So this is one benefit, revenue expenditure. And this is your second benefit, 100% capital expenditure. But you will not get this for land. So not for land, sorry, because land is very expensive and land is never depreciated. So if there is no depreciation, there is no deduction also. And one more thing, guys, not just the microscope that you purchased today, but even last 3 years, if you purchase some microscope, you will get 100% deduction because you are special. But guys, what if I sell this microscope? Then the government gets very angry. They say, listen, we gave you 100% deduction because you were supposed to use it for scientific research. If you sell this microscope, let's say you sell it for 90,000, then that 90,000 will be reversed under PGBP. Yes. Why? Because they gave you a deduction under PGBP. Now they'll reverse it. What if you sold this for 1 lakh rupees? That 1 lakh will be reversed under PGBP. But what if you sold this microscope for some reason for 1 lakh 20? Then 1 lakh will be reversed under PGBP, and above the cost 20,000 will be reversed under capital gain. I'll repeat this, guys, quickly. Please recap this with me. Guys, are you doing something very special for the government and for the country? Yes. What are you doing? You're doing scientific research. If you're doing it in-house means you are doing it yourself or your business and profession is doing it. Then for revenue expenditure, will you get a deduction even for the last 3 years royalty, raw material and salaries? Yes. And on capital expenditure, will you get depreciation? No, you will get 100% deduction except land, not just for this year, but last 3 years before the date of starting the business. But you have to use it for scientific research. If you ever sell it, then whatever your sale price is, we will reverse it from PGBP. If you sell that microscope which you bought for 1 lakh, if you sell it for 40,000, 40,000 reversal. But if you sell it for 1 lakh 40, then up to the cost 1 lakh, it will be in PGBP reversal, and the excess 40,000 will be in capital gain. Alright. And last, guys, what if you do outside research? Outside, no, there is nothing called outside. But what if you donate money, guys, for scientific research? Example, guys, a CA firm donates money for scientific research. Guys, first, please tell me, is this connected to the business and profession of the CA firm? No. So should they get a deduction? No, just like family planning, they should not get a deduction. But the government says, listen, you're doing such a good job by donating for scientific research, so we'll make an exception and we will give you a deduction of whatever amount you paid. To whom? To approved scientific associations. To Indian companies who are engaged in scientific research as their main objective. To social and statistical research, and to USIN, approved USIN. What is USIN? Universities, specified bodies, IITs and national laboratories. If you donate to these people, you will get 100% deduction of the money. So what if you donate 5 lakh rupees, you will get a 5 lakh deduction. But what if I give it to my neighbor, guys? He's also doing some scientific research in his kitchen. No, you will not get a deduction, guys. This deduction is only and only for approved scientific research associations. Indian companies who are engaged in scientific research, like Baba Ramdev's company, maybe. Social and statistical research, and USIN, university, specified body, IITs and national laboratories. 100% deduction. Guys, what if you gave the money and that time they were approved, and after that the approval was removed? That you don't have to worry about. When you gave, is it approved? Yes, you'll get a deduction. Guys, this is very often asked in the exam. This outside one is very often asked. Earlier, guys, you would donate 1 lakh, you would get a deduction of 1 lakh 25, 1 lakh 50 also. That means the deduction was 125% and 150%, but all that has been removed now. Now, if you donate 5 lakh, you will get a 5 lakh rupees deduction. That is 100%. Guys, this is section 35. Let me check if there's anything in section 35 that we need to discuss. Just 1 second. 35, revenue expenditure 3 years before, capital expenditure, but other than land, if you sell, it will be reversed. If you sell above the cost, it will be reversed under capital gain. And if you donate for all these outsiders, you'll get a deduction. Yes. Perfect, perfect. Alright guys, so this was our session now. We are done with 50% of the chapter, remaining 50% of course when we come back we will continue in the next session. Guys, PGBP is important. I am giving you a very holistic approach of PGBP and then we'll open up to questions as well. Thank you and see you guys in half. Any questions, do let me know. Thank you.